Aviation has been on a roller coaster. We have experienced the biggest drop in demand in its history, and many airlines have had to make many adjustments to survive. While there has been a positive impact from the recent uplift in the Americas travel markets, Europe has been a case of starts and stops. Similarly, the Asia market had recently reopened a lot of previously closed borders to attract more traffic, but there are still areas with tougher measures in place to prevent COVID which are weighing on the recovery. Inflation plays a role in almost every segment of the aviation industry. It affects the price of aircraft, debt, overall operations of the airlines and other aviation participants. One of the largest components of the cost base of an airline, other than fuel, is the aircraft itself. Inflation is exhibited through the steady increase of the official aircraft list prices of the predominant manufacturers, Boeing and Airbus, and their suppliers, which we see publicly. Manufacturers routinely raise their prices in the normal course of their business. One aspect of this is due to the increased costs of the underlying inputs for production such as labor, commodities, financing, etc. But the increases can run above inflation when there are increased demand dynamics. The past decade has not been unduly inflationary in terms of materials/labor, and buyers have been relatively apathetic to the risks of inflation. Interest rates have for years been at historic lows and commodities have seesawed, but ultimately have settled at relatively low prices during this period, for example, oil. Nobody seemed to remember the days of double-digit base rates or high commodity prices. This is exacerbated by the facilitation of growing demand and utilizing escalation. I have reviewed many aircraft purchase agreements between manufacturers and airlines/lessors, as an aircraft investor and a former lawyer. They all contain price escalation terms.